All right, welcome back to JYR Trades. Today is June 3rd, and I gotta tell you what a special day it was for me personally and professionally. I consider it one of my best trading days ever, not because of the P&L, not because of the trade or the win, but because of what I learned, what I saw, and what I felt in the moment. Because it's a moment that you're only going to develop with time, with experience in front of the charts, and there's no shortcut to this. Okay, it's gonna take time, it's gonna take effort, and once you get to a certain level, when you start to understand things, things get better, less stressful, more calm, more focused, and just overall better. Alright guys, as always, I am your host Jesse, and welcome once again to JYR Trades. Remember that everything that I share on my channel here, everything that I share is for educational purposes. Nothing is financial advice, but I will say this: if you want to learn how to trade the market using market structure, auction theory, not using buy and sell indicators, okay, no hype, no Lambos, just a real genuine trader trying to learn his own journey using the way of market structure with the way institutional traders think, then you're in the right place. Alright, so before I get into New York, what happened today, because this is New York, I need to go back and show you what happened the day before so that I can give you an understanding as to what is the lesson I am trying to teach you today. Alright, so we're going to go back all the way back to New York, okay, from the previous day. Alright, so first things first, when New York finished the day before, I will go ahead and do my levels. And I know that you see a lot of different red lines and a lot of different type of color lines, but let me explain to you what I do. Alright, first things first. Alright, I will draw up the day before. I will look at what was my previous day high and low, and I will draw that, and I'll draw the midpoints. And this is where I get my fib, and I measure from top to bottom. In this case, this is the Asia low. This is the lowest of the session, and this is the highest of the session at this point, almost right at the end of New York PM finish. Alright, so right here, this blue or this teal line is my previous day high. This other teal line is my previous day low, and right here in the middle we have this yellow line. That is my previous day mid. Okay, now the next thing I will do, ladies and gentlemen, is I will do two volume profiles. I'll do one for the entire day and one for New York. Okay, the New York value is the first one I always draw, so I'll get from 7:30 in the morning Mountain Time, our time here in this area, all the way to 2:59, right before the market closes. Okay, and I will do this here. Okay, I will go ahead and draw it all the way across, and that will give me three things. That will give me the point of control, where was the most volume that was traded throughout the day, the value area high and the value area low. Okay, this particular white line that you see all the way across, this is New York's value area low. This one right here is the point of control here. Alright, and then right here is the value area low. Okay, so the other thing I will look at is the geometry. Now you can see that the geometry here, guys, is giving me sort of like a P-shaped type, a little bit stronger to the top side, more of a drop off on the valley here, okay, and more of a staircase on the downside towards the value area low. Now, what do I measure here? I'll do a measurement of the entire New York PM and AM from top to bottom, and this will give me a mid. And the first thing I will look at is where is my POC in contrary to my mid. And right now, for this particular session, we were having our POC above, and if I recall right, it was this one here, about 74 points to the top. So that was telling us that there was a slight possibility, or there was a possibility, probabilities I would say, that the market wanted to go bullish. Now, the next volume profile that I do, ladies and gentlemen, is the entire day. This is from Asia all the way to New York PM. Okay, I will measure that. Okay, and once again, this will give me a value area low here, a value area high, and a point of control. Now I will say this, that value for the point of control, we had the same line as the New York one. The value area high was the same, on the same level. And once again, okay, I looked at the value area low. Now the value area low was a little bit lower than the New York one. But when I looked at the geometry once again, it looked to me like we had a little bit higher concentration to the top side, more of a drop here on the top side, which indicated more chances, more probabilities that the market wanted to go up the next day. All right. Now, I looked at my previous day mid, I looked at the POC, and I measured. And so what happened here? All right. I measured from here to here. And once again, we had a POC leading to the north, 129 points. So that right there gave us two volume profiles telling us that we wanted to go to the top side. Now remember that this is a game of probabilities, and the more probabilities favor us, the more chances we're going to go in the direction of the probabilities. However, you always want to make sure that the market confirms, right? So the next two profiles that I look at are the Asia and the London. And once again, when we looked at Asia, all right, we looked at Asia. Asia gave us a POC here, all right, and the mid here. We had once again a POC leading north from its respective mid. Now this one wasn't very large.
Put it in the right hands with LegalZoom. Because the last
And
thing you want to do is let
you'll notice that once again it went up 20 points. However, it wasn't a lot. So that was kind of telling us that yes, the micro imbalance here was telling us we were still going up, but it was beginning to shrink. London, on the other case, gave us a POC here, the mid here. Now it was telling us that it was creating a specific push to the downside now. So again, we had the imbalance for London going down. Now, at this point, guys, when I'm looking at this in the morning, I'm looking at this. This is the way I'm looking at it. We have three imbalances going up. The two macros, one being the 24-hour one, was leading big to the upside. The intermediate macro, being New York, was leading big as well, and then Asia, being a micro, was leading small to the north, and then London was beginning to create now a small to the downward. So they started to decrease as the session would progress, going upwards. Now, there's one of two ways to look at it. Okay, we have more chances for it to go up. Okay, or it's giving us a warning that it could possibly go down. All right, now I took it one step further, and I've been doing this lately, and I know it's a little more extra work, but I decided to do a 3-day volume profile. Now, I'm not trading off of it. I need you to understand that, but it's just there for reference to give me an idea if the warning from London was to be taken a little more seriously. Okay, and so when I looked at this volume profile, all right, we had the POC leading downward. The mid was somewhere up here, okay, and it was leading it downward. So like I said, I'm not trading off of this particular volume profile, but I'm using it for context. And when I saw that the London was now starting to go down, I kind of thought to myself, we're going to be careful but I am going to trade the way I've been learning how to trade. Okay, now guys, one of the things that you start to develop over time when you start looking at the charts more and more is you can't cut experience out of the charts. Okay, and in the morning, about an hour and 15 minutes before New York opened, London created its highest high. Now it didn't feel like it was one of those where it went up, spiked up, came back down. Okay, it didn't feel like that. It felt like a gradual type of move to the top side. Okay, so it didn't. It to me it felt like when London was about to finish, I felt like there was still a possibility that it was gonna spike up, go up to London high, grab that liquidity, and then move to the first trap. Okay, now in the last 3 months, I have been developing an eye for the trap. And you need to understand that the market's always going to have a trap, two traps every single day. And the trap that I felt, well, first of all, the traps to me are the mids, ladies and gentlemen. And when I looked at this here, we have London mid here and we have Asia mid here. What I felt was, first we were going to grab the liquidity, okay, go to the top side, and then it was going to start down. Now, I did take a trade, ladies and gentlemen, here. By the way, we had migration come up here. All right. And I took my trade even before migration happened. Migration happened here. I exited my trade right around here. Now, so let's talk about the sequence here. Price went up, grabbed liquidity. I saw indecision here on this particular candle. As soon as this one printed and I saw that we started going, as soon as I saw it started going down, I went in. Why? Because we failed to create a higher high at this point. Okay, with this double-edged doji candle, we failed to create a higher high. I felt comfortable going here because I saw the trap, and the trap wasn't going to be this one here. It wasn't going to be London. It was going to be Asia. Now, I initially had my take profit right at Asia mid. However, when I looked at it, I said I'm just gonna be safe and I'm gonna mark London low. And sure enough, price came back down within a matter of minutes. It hit my take profit, and then I saw something interesting, ladies and gentlemen. It didn't hit the trap. Didn't hit the trap. And so I saw it come up. Okay, I had already done my trade for the day. And what happened? Price came back up, and literally what I said to myself when I'm looking at this, I said, okay, it's gonna come to the POC right here, and then it's gonna come back to the trap. And I said to myself, after that, it's gonna go back up. That's what I said to myself. It's gonna go back up, hit somewhere on the cloud, come back to the specific second trap, the London mid, and then it's gonna take off. That's what I said to myself. But like I said, I was already done for the day, but I didn't marry that bias either. Okay, and I will tell you, in the past, when this move started happening and it started coming down, I would have told myself, okay, let's put a limit order here, a long limit order, and let's target at least the auction 0, the post-migration 0. Okay, I didn't do that. And boy, was I glad, because one thing that happened here, ladies and gentlemen, is that you see that price hit that auction 0, it rejected, and boy, it came down hard. Not only did it come down hard, it went straight to that -2. I mean, look at that. It went straight to that -2. So I'm looking at this here, and I'm looking at it with a different set of eyes. 3 months ago, I would have been upset with this move here, because I would have thought, hey, this is what it's going to hit. It's going to go up. And I wasn't upset, because I realized the market is trying to teach me something, and I'm going to learn something, and I'm going to figure it out. And so after I did my research with my friend Chat, boy, did I discover. The first signal that we weren't gonna go up, that we weren't, first warning that we weren't gonna go on expansion to the north, was actually this right here. When it failed to go to the trap the first time around that it was going, it was letting you know. This was the first warning. But the moment it came back up, hit the auction zero, failed to create a higher high, and then had some indecision and came back down, that was it. When it failed to go establish, when buyers failed to establish themselves an acceptance above the POC, game was over. That was the market telling us here, it's time to go down. Now, you'll notice here that the EMAs that I have here, my EMAs, were starting to line up now convincingly above price. And I mean, other than the fact that I had already taken my trade, kept my psychology intact, protected my capital, I realized I'm learning something here in the moment. And that's what I'm trying to say, that, you know, 2-3 months ago I would have been upset here because I would have said, what the hell happened? The market messed me up. The market, you know, F me over. And that wasn't the case. It had already given us a warning here. Okay. And right here was the confirmation, ladies and gentlemen. Alright. Now I have my other program, Remitar 2.0 or Remitar version 2 with the bands. And I did see this particular trade at some point. So these are the bigger bands. You can see this one here. It's the red, the white, and the green here. And of course, you know, I realized this here. Once it exhausted here at the -2, and it did it fairly quickly today. I mean, this was 7:49 in the morning, just 20 minutes after market open. It reached that -2 quickly today. Well, it started coming back up and it went back into the bands, and then it came back out and then went back in. That was a move right there, back to auction zero here. And that specific move, I mean, 163 points, another serious trade there. But like I said, I had already done my one and done. I was done for the day. And but most importantly, guys, it was understanding this here, this moment here, this moment here. It was a done deal to go to the downside. You know, and interestingly enough, you can see that price accepted below the auction zero, came back up to the auction zero, and you can see that it nearly tagged once again. Now here it tagged almost a second trap. Notice here, first trap didn't really tag it. Second trap, it didn't tag it here. Okay, unless my levels were off by just a bit, but no, they're on point. And what did it do from there? It decided to come back to the -2 again. I mean, look at that. And then it came back once again to the POCs. Okay, at least to these first two, and it came back up. We had a stack of them here. Guys, the win today was not the important thing today. It was this lesson here. Understand that the market is going to change its mind. And we may have a strong thesis. We did have a strong thesis. But we still have to wait for confirmation. And boy, I mean, today I saw it, and I am so glad that I was able to see it, learn from it, pick it up, because eventually, as we see it more and more, we're going to get better at seeing it in the moment and acting upon it. Okay. With that said, guys, I hope you enjoyed this particular session of JYR Trades. Remember, everything that I post here is for educational purposes. Nothing is financial advice. But if you want to continue learning on this journey, hit that subscribe button, and we'll see you till the next time.